it's very easy for you to lose a lot trying to earn a little. So which is better? Fundamental analysis or technical analysis? Hi everyone, it's Charm again from Ready2Adult Philippines, a channel about personal finance, entrepreneurship, and adulting how-tos. At this point, we've already done a couple of videos about the stock market, so if you haven't checked those out, then make sure to watch those. I've created a playlist on my channel. So now I'm sure that you guys are both excited and confused on how to choose the stocks that you're about to buy. And for you to come up with those decisions, you first need to know what type of investor you are and get to know the two most common types of strategies, and those are the fundamental analysis and technical analysis. So I know you guys have been waiting for this video, so let's start. First, let's talk about the types of investors in the stock market. We have the passive investor, the active investor, and the investor that's something in between. Okay, so who are the passive investors? These investors can be long-term investors, meaning they know they're gonna be in the market for a long time. They're in it for the long haul, maybe upwards of 10 years. And the current volatility in the market doesn't really affect them that much because they know that they are keeping that money in the stock market for a long time. So what they usually do is they keep on putting money and increasing their capital in the stock market. Okay, so the second type of passive investor is the dividend investor. And very similar to the long-term investor, they're also in it for the long term, but they're not necessarily after it for the capital gains alone, but also mostly for the dividends. And the main difference usually between the long-term investor and the dividend investor is the choice of stocks. So there are stocks that are specifically for dividend investing because they give a sizable amount of dividends every year, or they have a high dividend yield. And the third type of passive investor is the retirement or retiring investor. So I'm talking about people who may be in their 50s, 60s, 70s. And usually when you're at that age, you're more risk averse. So people who are in the stock market because of retirement or they're currently retiring, they usually go for preferred shares. We already talked about preferred shares as well. They're basically shares that gets dividends first. Sometimes they have a bigger minimum, they have a lock-in period, and they offer bigger dividends than the common shares. Okay, so preferred shares are usually preferred by people who are in their later years. Now let's move on from passive investors and let's talk about active traders. So for active traders, we have the scalpers. They're the most active. And then we have the day traders, swing traders, and position traders, which is the least active. When we talk about active traders, they're usually in the market, or they trade in the market more often than the passive investors. So scalpers can trade within a few minutes, day traders usually trade within the day, swing traders usually trade between days or weeks or a couple of months, and position traders usually trade within months or a couple of years. So active traders are definitely more hands-on than passive investors. Okay, now let's talk about the third type, and those are growth investors or growth traders, and they can also be called speculators. So basically, they can either be passively managed or actively managed. It depends on the duration of when you think a company can grow. There are some companies that are speculated to grow in a couple of months because of a possible business opening or because of a certain innovation. And there are also companies that are speculated to grow in the long term, maybe in a couple of years or a decade, because of the certain industry that they are in. For example, Tesla. A lot of people think that electric cars are the cars of the future, and it's not necessarily in a couple of years. It could take a decade or more. So this is definitely a speculative stock for the long term. Okay, so there are also, for example, like Dito is very popular in the Philippines right now. It's speculated to grow and for the stock price to grow because it plans to launch in a couple of months or a year. Okay, so yeah, that's basically the third type, and it can be either passively or actively managed. Okay, so they are called speculators or speculative trading or investing for a reason. You're not assured of the growth that these companies or stocks may have, so just keep that in mind. Okay, so now let's move on to the strategies. So let's talk about fundamental analysis first. And this is usually known as the investor's choice. So for fundamental analysis, you're basically looking at and analyzing the company's financial statements, their current assets and liabilities, their financial health and their competitive edge, their future plans, and basically the value of the company. So I know that what I just said may sound very overwhelming, and you're thinking like you have to leaf through all these papers and books of financial reports, but not necessarily, because there are a lot of tools and numbers that we can look at online to understand the overview of the current state of these companies. So first is we can look at the value of the company through financial ratios like the PE ratio and the PB ratio. So the PE ratio is the price per earning ratio. It's this formula, and basically it's how much the stock price is for every earning that they have. For example, for every 100 pesos earning, their stock price is at 1,000 pesos. So basically, their PE ratio is at 10. So for a rule of thumb, a good PE ratio is between 5 to 25. Okay, so for the PB ratio, it's the price per book value, or also expressed in this formula. And what book value basically means is how much the company's assets is as reflected in the financial statements. So meaning all their assets minus depreciation. A good rule of thumb for the PB ratio is when it's under 1.0. But if you're going to be a little bit lenient about it, then PB ratios under 3.0s are also considered okay. And the next is the dividend yield, and it's basically the dividend price ratio, or the dividend you get per share. And the good rule of thumb here is 1 to 3% is considered good, but upwards of 3% is considered a very good dividend stock. Other than looking at the value of the stock, meaning how expensive or how cheap the stock is, we can also look at the possible growth of the stock, and we can look at this through their earnings or their revenue or sales, and also through their financial reports. A good rule of thumb when looking at financial reports is to look at their sales and net profit, that it's increasing in the last 5 years. So when it's declining year after year, then that's usually a bad sign. Their possible future expansions and innovation, especially when it's a revolutionary product innovation, and also we look at their industry position. This can mean like my example earlier with Tesla and how it's going to be electric cars in the future, or for example, a paper company. In a world where everything is going digital, then their growth in the next few years might not be as much as compared to all these other stocks. So that's basically how you can look at a potential growth of the stock. And also, other than the value and the growth of the stock, you should also look at some possible red flags of a stock. So for example, their debt. So if their debts are much greater than their assets, then that's something to be alarmed about. So a good rule of thumb for looking at the debt is when the debt to equity ratio is usually less than 1. Or for example, their board members, their CEOs. If their CEO is someone who doesn't really capture the public's trust, that can also be a problem. Or their current CEO just resigned, or there's been a shift of a lot of the board members, then those are also things that you can look out for when you're looking at the fundamentals of a company or a stock. Okay, so now let's talk about the pros and cons of fundamental analysis. Let's tackle the pros first. So for the fundamental analysis, this is typically the strategy you use when you are looking for what stock to buy. And when you use the strategy, it's usually low risk because you have analyzed the fundamental of what this company is currently doing and what they can potentially do. So you have a good grasp on the company, which brings me to my third pro point, is that you are investing in companies that you know and that you trust. Now let's talk about the cons of using fundamental analysis. First is that it can be time consuming, even if all of these data can actually be found in one summarized sheet. It can still be time consuming because other than all these data, you can also be looking at news and you really try to get to know a stock before investing in it. So another con is that it doesn't necessarily tell you when to buy the stock. So you could potentially be buying a good stock at a bad time. Okay, so now let's move on to technical analysis. And this is usually nicknamed as the trader's choice. So what this is basically you're studying and analyzing price movements through charts for the purpose of trying to forecast what the possible prices are going to be in the future. So the main tool for this is really through charts, and as I mentioned earlier when we talked about the different investors, you can actually look at the chart not only day by day, you can look at it in terms of months, days, hours, every 10 minutes, 5 minutes, or even 1 minute. Okay, so it really depends on what type of trader you are. So when you look at charts, the most commonly used one are the candlestick charts, and we've talked about candlesticks in the previous video, so if you don't know what that is, then make sure to watch that as well. And the goal here is really to buy at support levels and sell at resistance levels. And what that basically is that when you are looking at patterns and historical data, you can more or less see what price support that is, meaning the price doesn't seem to go below that, or if it does, then that's a major breakthrough. And what the resistance price is, meaning the price don't usually go over that, and if it does, it's also a major breakthrough. Okay, so support and resistance levels are something that is very commonly used when you are doing technical analysis. So usually when you break support or break resistance, the old resistance becomes the new support and you create a new resistance, like this example shown here. And lastly, when looking at charts, you are also trying to look for patterns. Like I mentioned earlier, you are basing this off historical price and data. So you more or less know what the market sentiment is and how people are buying and selling at a certain time and how they react to certain news. So patterns are very big when you are trying to read prices on charts. So there are so many kinds of patterns. I'm gonna give some examples here, but basically that's really how traders analyze how a certain price can go up or down. Another thing that you can use other than charts are the market depths, and looking at that is basically how many people are trying to buy and how many people are trying to sell at certain prices, and this can usually tell you the supply and demand of a certain stock in relation to price movements. So when more people are trying to sell a certain stocks, then that can drive the price to go down, and when there are more people who are trying to buy the stock, then that drives the prices to go up. And lastly, when you are doing technical analysis, risk management is very important. That's why traders usually set an entry price, a cut loss price, and a target profit price, because without a proper plan like this, it's very easy for you to lose a lot trying to earn a little. Okay, now for the pros and cons of technical analysis. First pro is that it tells you when to buy a stock. It can show you the market sentiments and speculation, and also you can use it in a lot of different markets, not just for the stock market, but also for cryptocurrency, for forex, for commodities, and many more. Okay, now let's talk about the cons of using technical analysis. First is that it's very subjective, meaning that how you're analyzing your charts might not necessarily be how I'm analyzing my charts, and you can think that the prices are going to go up and I can think that the prices are gonna go down. So patterns aren't really accurate, which really causes the market to sway and fluctuate the way it does. Even if, let's say, everyone trading that stock is using technical analysis, it can really still fluctuate a lot. And next is that it is based on probability and not certainty, which means that there are more risk involved, especially when you're trading more often. That's why they set a cut loss price. So very active traders usually are very comfortable at selling at a loss, which usually long-term investors are not. Okay, so before we wrap this up, let me tell you that technical analysis and fundamental analysis are not the only strategies when it comes to investing in the stock market, but they are the most common ones. We also have, for example, snowflake analysis, which analyzes 5 parts of a stock, namely value, future, past, health, and dividends. So you can see an overview of those 5 aspects of the stock with the snowflake analysis. And also brokerages have their different insights as well. Like for example, Co Financial has their stoplight system, and it basically shows you the value, the momentum, and the sentiment of a certain stock. And it's called a stoplight system because it's either in red, in yellow, or in green when it's telling you that it's either good or bad. You can research other strategies also if you like, but at least you know that there are more strategies out there. Okay, so now let's talk about some tools when trying to invest in the stock market. And I personally use an app and the website called Instagrams. It's very user-friendly. I like the user interface. A lot of seasoned traders don't really like using this app, but I like how user-friendly it is. And I highly recommend it when you guys want to analyze certain stocks either through fundamental or technical analysis. And another tool that I want to recommend to you guys if you want to learn more about the stock market is stocksed.com, and they offer a really good comprehensive free course. So I will put them in the link down below. If you do want to advance to more technical and more comprehensive courses, they also offer that at really low prices. And you can use my code Ready2Adult Ph to get discounts if you do decide to purchase a course. The great thing about doing a course like their free course is that you're doing it at your own pace. The way that I'm talking right now might be too fast for you guys. When you have full control on the time and the pacing, it usually sinks into you more. So yeah, definitely check them out. It's made by Filipinos for Pinoys who want to invest in the stock market, so I highly recommend them. Okay, so now for the big question, which is better, fundamental analysis or technical analysis? One isn't really necessarily better than the other. And a lot of people, including myself, use a combination of both strategies. Like for me, for example, I would usually choose a stock based on the fundamentals of the company, and then I would later on trade that stock based on the charts or technical analysis. Because as I mentioned earlier, the fundamental analysis tells you what stock to buy, and the technical analysis tells you when to buy that stock. And remember that in the long term, the stock market generally goes up. So don't try to time the market too much, because that's also something that prevents people from investing when they're analyzing a stock too much, or that's sometimes called analysis paralysis, that because you're over analyzing these stocks either through fundamental or technical analysis, you end up not investing at all. Okay, so the key here is really to keep on investing and to stay invested in the stock market. And of course, I would really recommend for people to look at the stock market for the long term, because again, there are also risks. The key here is really to find what works for you. If you don't have time to read charts, then make sure that you are prepared to invest in the long term, and also vice versa. Okay, so I hope that you understood more what technical analysis and fundamental analysis are, and I hope that this video brought you one step closer into choosing the stocks that are right for you. And if you like this video, make sure to hit like and subscribe to the channel. Ring the notification bell so that you get notified every time I upload another video. And again, I know that adulting's already hard, but personal finance does not have to be. That's why I make these videos for you guys. Again, this has been Charm from Ready2Adult Philippines, and I will see you on my next video.